Hello traders and welcome to another video review. Today is Tuesday, December 10th, 2024. Let's find out what's going on the Forex economic calendar today. What do we have here? Overnight data, quite important data from China. Trade balance and imports and exports. As you can see, it's a very mixed bag of data. Imports are down even more than expected and down more than last previous reading, minus 2.3%, while the actual number is minus 3.9%. Exports, on the other hand, doesn't actually move that much as they should, down from 12.7% to 6.7%, worse than expected, 0.5%. Reserve Bank of Australia interest rate decision has taken place overnight as well. The RBA decided to leave the interest rate at the level of 4.35% as expected. German CPI prices are now in line with the expectations, minus 0.2%, which is exactly what the market participants expected. Previous reading was 0.4%. CPI in Denmark in the same level, 1.6%. Eurogroup meeting will start at 11 o'clock and OPEC meeting will start at the same time. Then we are entering the US session. Non-farm productivity and unit labor costs from the US are scheduled for release at 2:30. At 6 o'clock we got the WASDE report, and main event of the day at 6 o'clock, scheduled for release at 6 o'clock, is the short-term energy outlook. 3-year note auction at 7 o'clock, and at the end of the day, 10:30, we got the API weekly crude oil stock data release. So pretty easy day, pretty light day in terms of the data releases. Major releases we got already done: RBA interest rate decision and German CPI. So let's take a look what is going on the charts. We are going to start with the euro dollar. So the euro dollar, as you can see, after the CPI German data, is moving lower. WXY corrective cycle had been completed at the level of 1.0629. Then we got the bearish engulfing pattern. We went to test the 50 periods moving average, the green line here. Market tried to bounce a little bit. Nevertheless, it didn't actually work. We got another shooting star pattern here after this very short trend to the upside. A little bit squeeze between the moving averages and then breakout to the downside. Please notice that we are very close to the trend line support. That is located roughly around the level of 1.0533. So that's the yesterday's low and the technical support. If we break below this level, we are out. We are below the trend line. We are basically, someone might have the channel, so we are out of the channel. If you have another trend line to the upside. And then the next target would be located somewhere around 1.0473 and 1.0461. Those are two levels that might get handy for all of the bears. They might be used as the target levels. There you go. I wanted to do this. So one more thing I would like to point out on this chart would be the horizontal line at the level of 50 on the RSI. As you can see, the market is about to break into the negative territory. So if we additionally break out of the trend line support, the chances for testing the wave X low or 1.0470 low are very high. Let's take a look at the Australian dollar to see what is going on after the interest rate decision. So what do we have here? The market tried to rally ahead of the interest rate decision, and as you can see, we got this movement up towards the level of let me just adjust my chart. There you go, 6,474 pips, and then red candles down the drain, back where it all started, around 6,383. Local technical support is the low from this is December 6th 2024, 6,375. That's the local technical support. When it's broken, because it looks like the bearish pressure is very strong, you can see it on the RSI as well. It's a very strong bearish pressure here. Then we can expect the market to move even lower, down towards the level of 6,365 and 6,352. So those are the levels of the with the technical support. We got this technical resistance, but the market doesn't actually wants to respect this level. So let me move it higher, and the situation is still bearish. You can see it here that we keep doing the lower lows, lower highs, and the down trend is continued. So no changes here. Outlook remains bearish for the Australian dollar, because we got the data from the oil market. Let's take a look at the oil again. What do we have here is very typical oil behavior when it's under the pressure. Just a little bit of the bounce started on the yesterday, December 9th. We went as high as 68.87, and then bearish engulfing as the bearish engulfing pattern was made with local low at 67.91, because the market couldn't break above first 100 periods moving average on the 4-hour chart, roughly around 68.87, and the 50 points level at the RSI. So right now, with this kind of a retracement, we cannot say definitely that the bulls are back in town, because we are still hovering around the level of 50, but definitely a breakout above 68.87 would open the road back towards the this blue trend line here, and maybe even above the level of $70 per barrel. So that was the crude oil. Mixed outlook. The bulls are trying to do something. Now it's time to take a look at the Bitcoin, because yesterday we got very nice sell-off on the Bitcoin and on the rest of the cryptocurrency markets, especially altcoins, as we getting away from the all-time high 104,617 and the level 100,000 itself. All right, what we should do here with this line, I don't think after this flash crash, this line is much of the favor for us anyway. It doesn't actually works for us anymore. What we should take a closer look at is, of course, the momentum, which is below the level of 50, and it went even towards the level of 39 points. So pretty oversold market, but not yet extremely oversold. And the sequence of the upper shadows, long upper shadows, long upper shadow, long upper shadow, long upper shadow, and then we got this movement down toward 94,106, and this is the long down shadow, right? So lower shadow, lower shadow, lower shadow. The bulls are trying to of course sustain the momentum, stop the sell-offs here, stop the movement to the downside, but the market is barely back towards $98,000, right? So these days it doesn't actually looks like neither bulls nor bears have the advantage on the market. They are still trying to move up and down the price. They're still trying to push the price up and down, as this might be some sort of the let's say first step of the temporary top in progress. The temporary top is of course $100,004, $100,004, and that's why this market gets very violent, right? So please bear this in mind, that you might see increase in volatility this week on the Bitcoin, as the market right now is very unsure where it wants to go, whether it's supposed to go higher or maybe close some profits and then start the bigger, deeper correction from the current levels. So please keep an eye on this market. Right now it looks like we got some kind of a bearish pressure here, and it's definitely destroying the momentum, the upward momentum, as we got below the level of 50 already. But the bulls are still trying to do something with the current situation. They are buying the dips. So now the price is locked between 150 periods moving average on a 4-hour chart, 96,626 from the downside, 99,354 to the upside. So where will we go, to the upside or to the downside? We will know that in a few days, I guess, as the end of the second week in the December is will be taking place, will be closing roughly in like 6 days. So maybe during the 6 days we will see more action here. If there is still no decision, neither to the upside nor to the downside, there we will get more conviction that this situation here is rather top building in place than in progress. Basically, the top might be already in place, but the top building in place and partial distribution scheme might be right now in progress on the Bitcoin before we will do the correction. And then, of course, the market will be ready for another swing to the upside. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.